Hello class 11th. Welcome to the online tutorial sessions for business studies. I am Avinash Lambert, your business teacher, and today we are going to continue our second chapter, which is forms of business organization. In today's video we are going to complete our third stage for the formation of a company, which is capital subscription stage. In today's video we are going to complete the whole stage and the steps which are included in it. In the previous video we had completed the incorporation stage, before that we had completed the important documents, and before that we had completed the formation, the first step, the first stage of the formation of joint stock company, which is promotion. So now students, without wasting any time, let's start our third stage, which is capital subscription stage. Now, the private company, after getting certificate of incorporation, in the previous stage, in the previous video we had studied about the certificate of incorporation. The private company, after getting the certificate of incorporation, it can start its business and it can start its business. They don't have to wait for other formalities. They can finally start their business. But in case of public company, it has to perform the third stage. It has to perform the third stage and to get the certificate of commencement of business. That's the fourth stage. So the public company needs to complete the stage 3, which is capital subscription stage, and the stage 4, which is certificate of commencement of business. So that is the capital subscription stage. Now, under the capital subscription stage, there are certain steps which they need to follow. The first step is SEBI approval. First of all, know the meaning of SEBI. SEBI is a regulatory body of, the full form of SEBI is Securities and Exchange Board of India. Under the SEBI, there are, basically SEBI is a capital market, the regulatory body of the capital market. Now under the capital market, you are able to buy the shares, you can invest your money, you can buy the debentures of that company. So basically it's a market, but for the shares. It's a capital market where you can invest capital, or you can buy some shares, you can buy some debentures, which provides the share capital to the business persons, to the owners. Now, it is a regulatory body. It controls capital market. Why it controls the capital market? To protect interest of investors. Those who have invested, they should not be cheated. So this is a regulatory body. It controls the capital market to protect the interest of investors. Now, the public limited company must submit all the relevant information with SEBI. All the public companies limited, they must submit all the relevant, the important information with the SEBI before issuing its securities in capital market. Before they issue their securities in the market so that other people can buy it, they have to mention all the relevant information which are required by the SEBI. Next one, if a company, in that case, if a company hides any important information or some material facts, its registration can be cancelled. If any company, if any public company is not providing, is hiding some important information, then in that case, its registration, its incorporation, the certificate of incorporation will be cancelled, and it is cancelled under the guidelines for Disclosure and Investor Protection Act 2000. There is a law for it. If you are hiding some important information, then according to the Disclosure and Investor Protection 2000, it will be cancelled. The registration of that public company will be cancelled. Now, let's talk about the step 2, which is prospectus. You already know what is prospectus. You have already covered what is prospectus under the important documents. Now, what is prospectus? As you already know, it is the invitation to public. It is the invitation to public to subscribe its share. It's invitation so that people can buy its share. They can subscribe their shares. It's compulsory to prepare a prospectus. Every company needs to make a prospectus and it has to be deposited with the registrar. This need to be deposited to the registrar. So it's an important step. Now step 3, appointment of bankers, brokers and underwriters. Now these public company, they need to appoint the bankers, brokers and underwriters. Now they appoint bankers. The bankers receives and deposits application money. What does the bankers do? The bankers receives and deposits the application money. Whatever money is being received from these authorized capital or share capital or issue of capital or any investment in your company, then the bankers does the job for you. They receive and deposit the application money. Now, what does the brokers do? Brokers to sell shares. Brokers are the one who sell the company's shares, and for that they charge commission for it. They ask for some money, for some commission, so that they will do their work. So the broker sells the share for the public company. Now who are underwriters? Underwriters ensure, the work of underwriter is to ensure that they issue, that the public issues and subscribe almost 90% of the shares, and if that doesn't happen, the underwriters themselves buy the shares in that case. So underwriters are those who ensures, who guarantees that they will issue shares which are subscribed to be subscribed around 90%, and that's the limit also. They are bound to sell their, they are bound to have the money of 90% of its share to issue their securities. Now let's come to the step 4, which is minimum subscription. Now, to make sure that the company does not have shortage of funds, every company has a fear of having limited funds, of having shortage in funds. So that's the step. To make sure that the company does not have shortage of funds, it is compulsory that the company must receive application for some minimum number of shares. So there's a limit for every firm that they need to have the application money received for a limited or some decided number of shares. There is a minimum number of shares which they have to sell, for which they have to receive the application money for that. So there is a minimum number of shares as a limit. Public limited company cannot make allotment of share unless a minimum subscription is received. There is a rule that a public company cannot make allotment of share. They cannot give the shares unless and until there is a certain limit, there is a certain minimum number of subscribed shares, and that money which is received from that must be received. So public company limited cannot make allotment of shares unless a minimum subscription is received. I hope you are understanding me. Now, there are some SEBI rules. There are some rules which I need to make you clear. Now, company must receive 90% of the issued amount within 120 days of issue of prospectus. They are issuing the prospectus, and around 90% of their issued share, for that they must have the amount within 120 days. Suppose I have issued a prospectus and I am having 100 shares. Now, in 120 days, I want that around 90 shares of mine should be issued, and I must receive the money for that. So that's a rule. And if that doesn't happen, in that case, if minimum subscribed shares is not received, then there is a return of application money. If I am not able to receive that application money, then in that case, I have to return the application money within the next 10 days. Yes, that's so sad. If I am not able to have received the application money, then in that case, I have to return all my money within 10 days. For example, a company issued 10,000 shares and the minimum subscription for that share is 9,000 shares. So company must receive application money for 9,000 shares before the allotment. Otherwise, within the 10 days, they have to return back all the money. Now let's come to the next step. Students, we have completed these 4 steps. First was SEBI approval, next is the prospectus, third was appointment of bankers, brokers and underwriters, and the fourth one was minimum subscription. Now it's time for the step number 5, which is application to stock exchange. Now under this, the company must get itself listed in the stock exchange. They must get listed in the stock exchange before issuing any security to the public. So they need to list themselves. They need to register under the stock exchange. Now after that, the stock exchange authorities will verify the financial soundness and other aspect of the company. The officials, the authorities of the stock exchange, they will verify whether their financial statements which are they showing are correct or not. What is their financial condition, means financial soundness, and their other aspect of their company. They check it, they verify it whether they are telling the truth or not. And if these stock exchange authorities are satisfied, then the name of the company is listed in the stock exchange. That's simple. So the authorities will verify their financial soundness, and if they are satisfied, their name will be listed in the stock exchange. Now what if the company does not get the permission? Now under this case, within 10 days from the date of closure of subscription list, as soon as the subscription list is being closed, is being shut down, the closure date, now within 10 days, the allotment becomes void. Whatever they have allotted the shareholders, the shares, that becomes void. Void means zero, that never happened. And they return the return application money. Whatever the money which they have received for the application money, that has been returned back to those people. So that happened under the application to stock exchange. Now the last step is the allotment of shares. Now if the stock exchange authorities are satisfied, then the name is being listed, and after the name being listed, the next step will be allotment of shares, under which name of the company lists. Now company prepare return of allotment details about name and address of all shareholders, and that is submitted to the registrar about the details of name, address, number of shares allotted to each share under the shareholder should be there. So basically under it, the allotment of shares is done and the details about the shareholders is being shared with the registrar. Fine. So that is the 6th step, which is allotment of shares. Now students, I hope you have understood this 3rd step, which is third stage, is capital subscription stage. Now students, that's all for this video. Stay home, stay safe, and see you soon.